Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, January 29th, 2020. What I want to do is cover just a quick update on the markets and also some of the things I covered this morning. We'll start out with QQQ. And again, let me reiterate, we are in the hump of earnings season, or at least the week that I consider most important. That is the, 4 of the 5 market-leading FAANG stocks report this week. We have Apple out of the way already, 4 more to go, starting with Microsoft and Facebook tonight. So once we have those 2 out of the way, that's going to be the majority of those 5 FAANG stocks. So that, I think, will set the tone for where we go. And of course, we'll have to see how the market opens tomorrow. As again, you don't always see an initial reaction that happens in the after-hour session following earnings. It's not always the one that sticks. All right, so let's just roll through the charts real quick, and I'll show you what I'm watching. Here's QQQ. You have this trend line here, the yellow trend line. So I've highlighted on the 60-minute chart. You can see a trend line here, a smaller trend line. Again, we're on a daily time frame. If I don't make mention of that, you can just look up here. I usually have the time frame in the upper left-hand corner of the chart. So this is a daily chart, meaning every candlestick's a daily, one-day price action. A more significant chart. So as far as, sell signals, when you get a 60-minute or a 15-minute chart, I'll day trade off the 1-minute charts sometimes, and those are good for little, very small trades that last minutes or hours or maybe a couple days at most. And on this is where your larger swing trading and even trend trading time frames come from. For multi-week and even multi-month trades. So there's a trend line. We can do this if we want to. It's not a bad idea. Drag it down and give it what I call the benefit of the doubt there. Why did I do that? Well, you have, although you had more reactions before, you have 1, 2, the bottom of that candlestick body, the fat part, and now 3 there. So there's our benefit of the doubt trend line. This makes a better fit. Why would I mean by that? Well, you still have that starting point from the candlestick shadow there, the skinny part. You come across, pretty much get the bottom, that body there, the bottom of that candle, bottom, so that is that 2, 3, almost 4, 5, 6, 7, 8, 9. So you have a couple little pierces through there intraday, maybe a slight daily close. And again, you want to play it safe. You pull it down there, and we call that the benefit of the doubt trend line. So let's just leave it there for now. And then we zoom down to the 60-minute time frame. Now this is where our sell signals came from. Let me go down to this board here. It shows it nice and clean. There's the trend line. There was our breakdown on Friday. And again, that was our sell signal in QQQ, followed through with a big gap down on Monday to confirm that. Now, let me talk about a couple things in trading to consider. Let's talk about sell signals and buy signals, and we'll talk about there's really 3 factors or components that go into a trade that I look at. Number 1, is it objective? Let's talk about that. To go short, and let's just talk about shorting right now. Same thing in reverse on longs. So to go short QQQ at any point in this channel, the only objective levels to short it are the top of the channel, because we had a well-defined price channel. As I mentioned, you hit the bottom, you go up to the top, back, forth, simple stuff. So and those are all just short term. I mean, you can measure the distance from the top to the bottom of the channel, and you're talking here. I'll do it for you here. I'm just going to grab that line and come down here. So you're only talking about 1.3% or so. So those are just small, what I call micro swing trades. They might take a few days to get there, maybe even a week or 2, but they're relatively small trades. And so the most objective short entry comes on a break below the channel. Now, just because it's objective, let me look at something else for you. Let's look at Apple. That's the one I want to use for this example. Here's a better example. Okay, so Apple, you had a comparable trend line, and it broke down. Although it broke down on Friday, it wasn't very convincing. Remember, we closed there. And then you had a very convincing breakdown on Monday. However, you have to give that one a big, fat question mark, because as I say, any breakdowns or breakouts of a stock that occur right before, especially a day or 2 before the earnings, even a week before, have, from my experience, a much, much higher rate of failing. That's because things can go the other way in earning. You just want to take that with a grain of salt. You prefer to take breakdowns, breakouts before. With that being said, there's a lot that goes in here. This stuff's not all black and white. That was an extra sell signal, and now Apple has come in back tested. However, let's talk about objective. Let's talk about when to short, when not to short, because I had questions on Monday. Hey, is it a good time to short QQQ? And I said no. It was a question I think in the comments section. No, I actually covered my shorts that I went into the weekend with and reversed at Monday's lows for a bounce trade. And why wouldn't it be objective here? Well, it wasn't objective on QQQ because we were at a good support level and we were very oversold in the near term, very near term, that is. And therefore the odds were good for a bounce, and other factors in there too. The big FAAMG reporting, I didn't think the market was going to take a 5-10% dive right before earnings. It's not going to move that much. So the odds favored a bounce on Monday, and that's what we got. Now let's talk about Apple real quick. Let's talk about objective. Okay, so the gap down, the breakdown, that's a sell signal, yes, but is it objective? No. Why? Well, as you can see here, the first target or decent support, there was minor support right here. You have a gap, so I should say there was support there. I don't have it on this chart. So number one, the fact that you gap down big to support was not objective. Now maybe if you gapped and it was just below a support level and that opened the door, that might be one thing, but it wasn't. So you gap down right to support right about here, and you also gap down, although that was minor support, that gap support, the bigger levels I think are this uptrend line here. It goes back quite a ways, and it comes in right around that 300-ish level, and I still think we work our way down there. However, the reason this was not objective, that is what I call no man's land. It's a term I refer to as when a stock or index or anything is smack between a decent support and a decent resistance level. In other words, this was your support right here with not much below it until down here. So support, resistance, you're right in the middle. Why is that not objective? Well, because of this. When a stock goes down, when you take any trade that's trading in what I call no, even if it worked its way down there, even if it didn't gap down, if it zigzagged down there, it doesn't matter. You're down there, and if you say, oh, well, Apple's going and it's going down, it's dropping, it broke trendline support, should I short here? My answer would be no, it's not objective. Why? Because I like to, when I'm going short, I will either short on a break of support, like if this is your support level 328 and you have a trend line here, so I'll short here, and then I'll have my stop just above it. So let's just talk about that 300 level. So that would be an objective short. Let's say if it broke there. There's some other factors, how do the indicators look, what's the price look like, is it the first tag? But let's just keep it simple. Say the break of support, because then you can put a stop just above right here, somewhere around where that arrow. Just imagine that's a line tool. That way, if it goes against you and the security recovers that, because support once broken becomes resistance. That's the easy reason. So if the stock goes back above, then it's not objective anymore. And the other way I short is this, for example, a bounce back to resistance. So you broke down on Apple. It was in no man's land, not objective. Now it's come back. Right now it's just above the trend line. We have Microsoft and Facebook tonight. No reason to really pile in too heavy here. I'm comfortable with and have starter short positions. And if the charts, start to firm up, meaning we'll need to see Apple reverse soon. Probably as in tomorrow or after the bell tonight, depending on what Facebook and Microsoft do. But certainly by the end of the day tomorrow, if it goes up much more than what you have here, this whole thing right here and here was a false breakdown, failed breakdown, whipsaw signal, whatever you want to call it, all the same, because you've recovered or regained the trend line. Now we're only above it by a slight amount right now. We are above it, number one, which says not really objective now. Maybe earlier today it was there. At this point we're getting above there, so now you'd want to hold off and see if that's just a little whipsaw move back through and you fall back below. So that's what I wanted to talk about. And then the other factors into trading too is risk reward. If you were to short a break of 300, what's your target? If you shorted it right here, let's just say hypothetically, I know prices are already shorted right here on a breakdown, and you were targeting this uptrend line, that's not a very big drop. You can see that uptrend line comes off all the way back in early August or so right there. And therefore you have to measure it out, and you say, okay, if I short right here and the uptrend line's 3%, you can certainly take that trade. It would be a quick trade, And the thing is, you don't want to allow yourself a 3 or 5% or even higher stop loss. You want to use ideally about a 1% stop loss, and you need to get that in there. And I also like the stop loss as if I short on a break of support, just a little bit above that line in case it wants to go on and back test. So those are just some of the things I look at in trading. And now let's kind of wrap this whole thing up and just look at those securities that I highlighted today. So we'll just do a quick overview of where everything's at as we're heading into the earnings from Facebook and Microsoft tonight. So QQQ, solid breakdown, still well below the price channel breakdown, and it appears to be so far nothing more, and it may prove to be more than this, but it looks like nothing more than a snapback rally. You have a gap there. If you recall on this chart yesterday, I had this white line that was my max bounce target. I had the labels, on a different charting program or the screen capture program said max bounce target, preferred bounce target, and I think that's where we were. Let me look. Yeah, I'm correct. I just wanted to make sure. These, levels are constantly changing. So this was yesterday. That was actually, I'm sorry, lines were color coded. That threw me. My preferred bounce target was the 221 level right there, and that was my max bounce target. You can see defined by these reactions. So we're there now, and so I will say this: this is to me an objective entry. There's a couple things that make it not the highest probability entry because, and I'll get to that right now. But there it is. We're at bounce back to resistance, still well below the price channel, well below the trend line. Indicators are buried down clearly in bearish territory. If you're new to the site, something I've used for years, I like to use this PPO. I like to use the 9 EMA right here, which is call that the signal line. You have your PPO line in blue, signal line in white, because it's the last of the two to cross, and it does a great job, as you can see, of defining bullish and bearish trends. Now, we've been in a pretty strong uptrend for a while, so you notice, of course, that most of the time that white dotted line has been above the zero line. There's been a couple corrections. They were small, but it did tell you, hey, correction mode, but then once it flipped back to a buy signal, and now we're on a sell signal. And sometimes you roll back far enough, these sell signals last longer. And when you finally get a good old solid correction, or we haven't had one in quite a while, that will most likely remain below there. So I just wanted to say there's more than one check mark, but there's still a few more that we don't have yet. I mentioned earlier today we had the VIX breaking out on Monday, along with Apple breaking down and the follow through on QQQ. The VIX broke out, almost hit that first target I had. This is a downtrend line I've had here for many weeks, if not months, I think. And I also had the 1573 and 1673 resistance levels. We pulled back to right now to that 1573 and back testing the trend line. So just like QQQ, and mind you, it's not a mere coincidence that this is it's almost a near mirror, an inverse of those charts. Remember, on QQQ we're back testing the uptrend line from below, and on VIX we're back testing the downtrend line from above. So that would be an objective entry. But let me show you some things give me a little bit of pause and why I'm not aggressively short right now, in addition to Microsoft and Facebook, because that can go the other way. Look, the stock market has been booming, the economy's up, so I expect, just like with Apple, I expect record earnings, or at least to meet or come close to or probably exceed their expectations. But again, it's how the market reacts to them, and they could miss. And there's other components. You have earnings, and you break down revenues and all these other things there the analysts are looking at. But I just wanted to say that helps to confirm the case. Now let's look at the FAANG stocks real quick. All right, let me flip over to QQQ here. Let's go to the FAANGs, starting out with Apple, which I already covered. There's the primary trend line, again off the December 3rd lows. I showed it to you on the 60-minute chart before. Here it is on the daily chart. And we are back testing, or just a hair above it right now. Now the day isn't over. This is a daily chart. This is more significant than the 60-minute chart. We have a solid breakdown, followed by, if we close today, if we reverse, we're up 3% on Apple now. If we give back some of those gains and close on the trend line, that's a test. If we close below it, it's a rejection. And really what'll open the door is if we start to move away from there. And certainly I think by the time if we take out Monday's candle, that should seal the deal and take us down here to this longer term trend line. You can see it comes all the way back. If you want to replicate that one off the June 1st low, June 3rd. June 3rd low, pretty well defined trend line. Looks like really I don't see a lot of horizontal price support here until it gets there. So that would be a nice swing target for Apple should that play out. And what would it mean? Let me move this trend line away. It would be a drop. Depends on when it gets there. I always say trend lines are dynamic, meaning the price level comes in at a different point each day throughout time. So the sooner it gets there, the bigger the drop. The longer it takes to get there, if it does, the less the drop. And of course, it could go up more and then get there later. So, but right now, let's just say, looking at this, somewhere around 12, 13 maybe percent, and I think that meshes with the target I gave you on the 60-minute chart. So there's Apple. Again, we'll see how the day finishes. We'll see what Microsoft and Facebook do tonight, because if they move big to the upside or downside, that's likely to influence Apple tomorrow. It's not guaranteed, and there's support there about 328. All right, divergence is still intact, everything else. So let's rifle through the rest of them real quick. Microsoft, again, they're reporting tonight, so this is going to go either way tomorrow. What happened with Microsoft is Monday it also broke down, so there was another sell signal, but again, taken with a big grain of salt because it was right before earnings. Their stocks you're going to have an increased chance of getting whipsaw buy and sell signals when you get breakdowns on a company just before they report earnings. And on top of that, technically speaking, you had I always talk about giving the benefit of the doubt if you have two support levels in close proximity, and here you do. You had a reaction high, a gap right there, several more reaction highs on that gap. You tested it there and you bounced. So what happened is you broke the support, but you hit a support level that was just below it on Microsoft, bounced back tested, rolled over, but now we've regained and solidly regained the price channel. Really, I don't want to say it doesn't mean anything, but again, it doesn't mean as much right now because earnings coming up, but I will pay attention. Just because that trend line's been violated once doesn't mean it's not valid anymore. So let's see what happens tomorrow. The bullish case would have this trend line remaining intact, and you can see again Microsoft has been in a price channel for a while and it's still in that channel now. Trend indicator is bearish. Remember, I use a white line because it's the last of the two to cross. By doing that, it gives you fewer whipsaw signals. And the nice thing about that as well is the zero line, which I use to delineate, bullish and bearish trends, often acts as support when tested from above when you're in a bullish trend, and then resistance from below. Now, this happened to be just a little brief sell-off, and told you bearish trend there to there. Once we got above it, again, you can see come on back. That white line tends to come on back here and back test. And the same thing tends to happen in a bear market. Or a bearish trend, I should say. That is resistance. So today is a big day, and today and tomorrow where this stock goes, because this is one of the FAANGs. This is, I believe, the second largest component of the S&P 500 and NASDAQ 100 right behind Apple. So where Microsoft goes, if Microsoft doesn't break down and continues higher, the market's not going to break down. It's just, it's not going to do it. You're not going to see Microsoft climb another 5-10% and the market drop 5 or 10. It's just very unlikely to happen. So this is what I'll watch for. Break of this trend line, break of 160.65 right there, or the low on Monday roughly, and you can see the potential targets. If we don't get that, then we don't have a sell signal on this stock, and it's going to significantly reduce the chances that any short trades will play out for much more than they already have. All right, next one up, Alphabet. I believe they're the last of the three, and they report, it is February 3rd. That's next Tuesday, I think. Look at this chart. You have a nice uptrend line, impulsive breakdown, big red candle, which you want to see follow through. And, it sort of looks like it's flagging right now. You don't see the flagpole visible there. Flagpole is an impulsive move leading down to the formation of a bear flag continuation pattern. But a gap is, remember, a line chart, you'd have a line there. A gap doesn't show anything because they didn't have any trades occurred. You gap down, but that is your flagpole. That's an impulsive move down, and that would measure, you take the length of the flagpole, add it to the flag. If, big asterisk there, if the sell signal is triggered on a breakdown below the flag. Otherwise, this could continue up. So, like any chart pattern, It's a potential bearish pattern pending a sell signal, just like you had a price channel here pending a sell signal. You got it there, and you dropped. It wasn't much, but you corrected more so in time than price, but it was about a 2% drop. Channel. So you can see this stock tends to run in these channels and moving up, and you extend that trend line, and that takes us right there. So you tend to come in, break a channel, move up, break a channel, move up, and I don't really have a clean line to put from below. This is we've gone not parabolic, but in a pretty steep advance. So the trend line, you can see the slope of this trend line is much more steep than these other trend lines. And from that, when you get correction, usually come your sharper corrections from the more steep uptrends. So there's Alphabet. Let's look at the 60-minute chart. Bear flag or bearish pennant did not play out, so I'm going to remove these lines. We had a potential bearish pennant yesterday, or I think it was yesterday. However, again, I still think we come on down to this trend line here and test it. We haven't checked it in a while. When you have a trend line like that, every now and then the security likes to come back in and check it, even if the uptrend's going to stay intact. And then, like every uptrend, they don't last forever, so you want to look for a break at that level to trigger a potential sell signal. All right, Amazon. I don't have a strong opinion on Amazon. I think I went over that recently in the FAANG updates. It's kind of been grinding around sideways in this big sloppy range. And really, yeah, like I said, I don't have a strong opinion. Since the overall trend is bullish, you got to give it to that for right now. Here's some support levels below to watch, but let's move on to the next one. I already covered Alphabet, but that was the Class A shares. Here's the other share class, and there's that trend line to extended. Here's another one extended, and they come in together right there. Boom, apex. So really what that is what I call a high-level back test. You had a breakdown here. A little correction, mostly in time, a little bit in price, move up to back test and a rejection there. So let's look at Facebook now. Facebook on the daily chart here, price channel or trend line breakdown back testing right now. Again, they're going to report after the bell. We'll see that. Here's the 60-minute chart. There's the same breakdown there. The divergence is still very much intact right now. Even if it pops up, makes a marginal new high soon, it will be a divergent high. And one more I wanted to cover is Intel. They've already reported. It's the 6th largest holding. And so far, they had a post-earnings pop, but they've gone nowhere. They've given up a little bit of the gains, but not much. They're kind of consolidating here. There's potential for what's called an island cluster reversal top. You can do a quick web search on that pattern. When you have a cluster of candles like this and separated by a gap on one side, if you were to gap down, and this can continue to build, you could have more candles or you have enough now. Sometimes you can have a single candle, and they just call that an island cluster top. I'm sorry, an island top. This is a cluster when you have multiple candles. So that's one potential scenario if you get a big gap down in the markets or just an Intel anytime soon. I love these patterns if it proves to be that. Why? Because even if it doesn't work out, it's very objective and the risk reward's very high. Number one is the fact island cluster top or an island top pattern is a topping pattern. It is not just a continuation or a brief reversal pullback pattern. They come after an extended uptrend. We got to roll this back a ways. This has been a powerful uptrend right here in Intel, and you can see it's at highs. In fact, there was your last island top. Look at that. I think I might have pointed that one out back at the time on the site too. That's an island cluster top. You have an island of candles there, and a big gap on both sides, and that marked a major top. So these are major topping patterns. Why I love them: if you get the sell signal, it's simple. You short, and what happens is they have no business getting back above the island. Now, you could have a stop a little bit above the bottom of the island, but to be safe, sometimes they'll pop it into the middle, especially in this day and age. Back in the old days, yesteryear, these patterns tend to work out, and in recent years, the algos know the same patterns that retail and professional traders are trading, and so if they have the money, enough power to move a stock, and many do, if it's a multi-billion-dollar hedge fund, they'll do that. They'll know a cluster of stops will sit right here, just above that, so they'll pop it right there. Then they'll go short after they cleared all the stops on the buying when the shorts cover, and then the stock drops. So that's why you got to give a little bit of room in this market on your stops when you're swing trading. And Anyway, so there's a pattern to look for. There's a little doji top right there, doji top and candle. And again, only a potential pattern with a sell signal yet not yet triggered. And I think that's it. Let me see if there's anything else I wanted to cover. I did want to bring up GBTC this morning. I almost posted it in the risk off asset post that I gave you with the VIX and treasury bonds and gold. Now, Bitcoin is I consider it a risk off asset. There are times where it's trading correlated with the market. Sometimes it's not correlated. But there are a lot of people that consider this a flight to safety. It's a way to get away from the U.S. dollar and other fiat currencies. Also, considered a different asset class, if you will. And it lately it's tended to rally when the market went down and also correct when the market went up. And so we hit our second target. I'll have to do an update there. Second target today. I was going to cover this earlier. We've since hit it. We're at 1048 now. T2 was 1046. We took it here at 863. Break above 863. So our entry price was 864. That's what's green right there. So this one's good so far now for about a 21% gain, and I'm going to leave it on. I still like the outlook for this. Look at the chart. There's a downtrend line, breakout, back test, a little whipsaw through there, but it held, and it stayed above our entry price, stayed well above our stop. At this point, it's prudent to raise stops to protect profits. And I just wanted to update that as well because I didn't cover it in this morning's spot. I tried to get that post out to you guys as soon as possible. So there it is. You have treasury bonds, gold, all looking strong recently, heading into the earnings. The FAANG earnings, and it tells you maybe there's a little nervousness that it still could prove to be an inflection point. Yes, Apple was the biggest one. It's out of the way now, but it doesn't mean it's over yet. So let's just see how the next few days here go. And we'll go from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.